Hello and welcome. My name is Paul Wallace. I'm the Africa editor at The Banker magazine, and I'm here with David Cowan, the chief Africa economist at Citi. We're here in Marrakesh for the African Development Bank's annual meetings. And David, I just wanted to start by asking you what you think have been the most interesting developments to have come out of these meetings.
I think what the interesting development has come out is actually quite surprisingly, some people might think, in that there's a discussion of the title going on here, right? Africa is growing fast. I think people are aware of that, or fast-ish, right? And what we're seeing is that people are increasingly asking this: who's benefiting from that growth? How is it trickling down? Is structural transformation happening? And I think that's the theme of the conference. And actually, it's the question that has been put off for quite a long time and is actually really being asked. And I think actually some of the most interesting comments on it were yesterday by President Paul Kagame, who kept stressing that yes, Africa is growing, but policymakers need to run faster and faster to make sure that that growth really is transformative and moves down. I think he probably hit it right on, and I think that's probably the key theme that comes out of it.
There's obviously a lot of bullishness and optimism about Africa at the moment among international investors. And that's reflected in, for example, the huge demand we've seen for African Eurobonds in the last 18 months or so. Do you think most of that optimism is justified, or do you think in some ways it's overhyped?
I think, yeah, there's a twofold element. There is a little bit of overhyping on some of this, and I think that shows up partially because some of the over-demand for African assets reflects the lack of supply. And so you have quite large sums of money chasing a relatively limited supply, which then bids up prices or leads to this huge over-demand. Now, we may have crossed that threshold. Some people are arguing, for example, that the Zambian Eurobond issue was actually the sort of the height of it, and that's as low as yields will go. And when we run forward from here, we'll see how that changes. Certainly, I think on the Eurobond side, the next few months will prove very interesting, with both Ghana coming to the market, probably Nigeria following on, and then Kenya in September. So that would add for once quite a lot of supply into a market that may be turning slightly. And I think that may prove an acid test of how much interest there really... Well, there will be interest. I think that's the wrong way, but the sustainability of that interest, and it might tell us a little bit about the future, about whether the story is overhyped or whether there is this real fundamental underlying demand for these assets and the story is robust.
Do you think that there's investor interest across a broad swathe of sub-Saharan Africa, or do you think the vast majority of interest from overseas investors is concentrated on the big economies, the likes of Nigeria, Ghana, Kenya, and Angola, say?
The way I characterize it is that the interest is based in a group of economies that you can broadly classify as more reformist. And certainly, Nigeria, Ghana fit into that. Some of the interest in Cote d'Ivoire and Senegal. And then in East Africa, Zambia, Kenya, Uganda. A little bit less in Tanzania because it's a less open market. And that would be the same with Ethiopia, that is a less open market. So I think it's a combination of these more dynamic economies, which are not necessarily the biggest. Nigeria obviously is, but Ethiopia would attract a lot more investor interest if it was Opia, and that's obviously a large population sized economy. DRC is the same. It's a huge economy, but very little investor interest. So I think it's a mixed pattern, but the way I look at it is think of it more in reformist economies, right? Even if you're a small economy, if you're a reformist like Rwanda and come with a Eurobond, you can still attract quite a lot of interest. So it's about the political environment, and the nature of the government and its willingness and desire to go out and sell itself as a story, and to think how it wants to use investment inflows to aid its development.
What do you think are the main problems facing investors in Africa today, and do you think that governments across the continent are doing enough to solve those?
The straightforward answer is lack of supply. Lack of supply of assets, and I think that's most visible in the equity markets. If you look at the two equity markets in Africa that it's possible to trade, Kenya and Nigeria, and you start looking at the PE ratios, particularly of the non-banks in Nigeria, you see that they are very high. And then the problem is, how can governments encourage companies to issue more equities. And that's a very real policy debate. For example, I know in Nigeria that debate has happened all the way up to the highest level, and the government is very reluctant. In fact, it's stated that it won't force companies to list. But if you don't do that, how can you encourage companies to list? What can you do? You can offer tax incentives and certain other things. But beyond that, there's not a lot you can do. Similarly, if you think about it on the Eurobond side, Zambia comes with a Eurobond. It borrows 750 million. What is the capacity of the Zambian government to come back again within a few years and borrow another 750 million to borrow? It's limited. So I think governments are in a difficult position. They can do things, but they're not easy things that you can do in a short time frame, I think, to encourage a greater supply of assets.
David, thank you very much for your time.